So I want to talk a little bit about tech. We've been positive on tech for some time, and tech's worked out quite well, but we're starting to worry. Everything is coming up roses. And what we're concerned about, really, that's causing a concern. It's actually causing a paranoia, and perhaps it's just our Catholic guilt. But at the end of the day, what you're seeing is pre-announcements to the positive side. You're seeing analyst upgrades. And every time we talk to clients, to analysts, to corporation, it's tech, tech, tech. When you have that type of positive sentiment, when you have that type of positive news, usually it means a lot of the good news is priced in, and that's a concern to us. So let's just check off a couple things. Like tech, bullish sentiment, perhaps too high, but now, more importantly, what we're seeing is passive flows. Passive flows are the marginal driver, and passive flows are uninformed information flow. Passive doesn't care about risk reward. Passive doesn't care about fundamentals. What passive is trying to do is trying to get exposure. And ultimately, what it does is buys what works. And what's working is technology. And that's fine for now, but longer term, we're concerned. So ultimately, when we take a step back, what we're worried about is good becomes great, and great becomes bad. Now, the last thing we want to talk about is momentum. And if you look at momentum, chart looks good. However, even momentum ultimately has some sort of reversion to the mean. Chart doesn't always look good. So at the end of the day, we're worried about good becoming great, great becoming bad. We're not ready to pivot because we still like the valuation, we still like the fundamentals, and passive is a tailwind, but now we're starting to think about it. Now we're getting worried because everyone is very, very bullish on the space.
I think Chris comes over, right?
Well, no, he tried to curry favor with you. Thanks for having me back.
So you think we shouldn't have him back over here?
He should get thrown up. He should get thrown in the building.
Come on over, Chris. Michelle will bring the chair in. Thank you, Michelle.
Oh.
So you're not ready to. You don't really sound highly convicted in this call to get out of technology. You're saying sort of watch it because it might turn from great to bad, but how do you know? Because that is your job to tell us.
It is our job. So what we're saying is we're getting ready to get ready. We're starting to see the euphoria. We're starting to see the good news. At some point, we're going to pivot. So we're telling clients, get ready, look to turn, but not yet. And what we want to see is we want to see the euphoria fill in. We want to see capitulation on the value side. We're starting to see that. We're starting to see value players capitulate. We're starting to see them start to chase momentum, start to chase technology. We haven't seen it yet, but we're waiting for more upside. When we see that upside, that's when everything is positive, that's when we're going to make that turn.
All right, so let me ask you, when you say get ready to get out of tech, what does that mean? Lighten? Get out completely? Short? What does that mean?
What that means, we always go in a stepwise fashion. So the first step is to bring it back down to a market weight. Then we're going to look for a catalyst to go underweight. What we're doing is we see a lot of, whether it's low volatility, whether it's staples, whether it's utilities, whether it's pharma, we're seeing a lot of these names fall out of bed. There's opportunity building up. But again, we don't have the catalyst to shift to that risk aversion. We're looking for it, and we think that euphoria is that catalyst. We're not there yet, but 2Q numbers are quite good. And again, what we're worried about is good becoming great, because when it becomes great, that's when it becomes bad.
As you go from overweight to market weight on technology, what do you cycle into then?
So what we're telling clients to cycle into is the banks. So we've heard a lot of talk about banks. Incredible capital give back story. Work with Mike Mayo. He thinks it gets even better. The sentiment around banks, not that great. Valuation, rather attractive. And we think from a risk point of view, it's actually rather attractive as well.
All right, Chris, thank you.
Thank you.
Chris Harvey. Would you rather?
I like this game. Would you rather? Let's play the game.
Banks or tech?
Wow. Banks or tech?
Because he's saying go from overweight to market weight on tech and cycle into financials.
And I like Chris Harvey. He's a smart man, despite the fact that he tried to curry favor with you.
It doesn't mean that you're buying what he's selling.
Listen, banks have been going sideways to lower now for the last. Everybody, I'm one of these people, by the way, come on and said, you know what, banks make sense on valuation, price to book, but they haven't performed. So given the game, would you rather, I'll stay with tech for now.
I'm overweight tech right now.
Right, okay.
I'm more in tech than I am in banks.
Are you inclined to get ready to pivot?
I'm inclined to get ready to do something, yes. I have to wait a little. I got some tax thing. But anyway, all that ever said, I like the banks. Clearly, they haven't performed at all. I have big positions, JP Morgan, Bank of America, and Citi. today's thing was not news at all. Next week we'll see what they can do. I think the valuations are really attractive here. I don't know when they'll start to find favor, but they will. They will. These valuations, I think, if the market doesn't fall apart.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.